G'day, welcome to today's update. Now, today's focus is about tuning out the noise. There's been so much noise in the media the last couple of weeks, understandably, with Trump becoming the president again of the US, and every day there's so much news to digest. And understandably, that's creating for some people to be concerned about what's going on and should they change their strategy. So let's go through it. Let's try and tune out the noise. As you can see, wouldn't be a paper in the world or a headline somewhere that's not covering this topic right now. So when we look at the noise, I think one of the things I like to do is look at some of the underlying statistics going on and some of the underlying economic data. All this data here is from the Reserve Bank, and it gives us all the data. I've gone back to compare it to 2001, and it's 2024 data, obviously. So we look at some of that interesting data, and it's interesting how a lot of things are the same, if not slightly better than 20 years ago. Some are a bit worse, but generally speaking, when we look at numbers, some of the inflation numbers are almost exactly the same. Some of the growth numbers are very similar. Employment right now is a lot higher. Our trading partner and our shifts between trading partners has obviously changed a little bit. More resources, a lot more with China, as we all know. But some of the underlying numbers actually aren't too bad at the moment. So I'm not saying it's all perfect, but when we see some of these headlines, we've just got to put a bit of that into perspective. Happy to share that link as well if anyone's interested in economic data. It's my favourite subject back at school a long time ago now. So big year ahead for Australia as well. We've got an election coming up, of course. There's some big changes that are not yet passed and that might not get through until the election, particularly around superannuation and tax. But obviously the big focus we're going to hear about so much in the next couple of months is cost of living, the energy debate, and is it a bit of a throw to Australia first? We might see that that's been the trend around the world. There were lots and lots of elections around the world last year, and a big shift to this sort of, are we doing things, and that's a bit of a change. There's been this in the past of real globalisation, and now we're starting to see countries start to think more about internally first. Not sure if that'll be the case here, but we might see that trend. A lot of tax changes have been mooted, but I'd say that not going to be put on the table. We've seen what happens when at election time tax changes are proposed. So I'd suspect that there's not going to be a lot of change there. Most of the focus will be on how can they, bring down the cost of living, look at inflation, and this. I think the energy debate is going to be right on top of the list. We are seeing some changes by default to superannuation limits, which will come through. So into next year, the limit will go to $2 million per person that you can have in super tax-free, and some of those contributions and your super guarantee will change as well next year. But a big message I have here is that I think we should be really optimistic about Australia. We are in a fantastic country. It's not perfect. We've got some great opportunity, a lot of growth going on, and a lot of growth in the future. Australia is going to be a growing country, lots of opportunity. So underlying, I think we've got some really good things to look forward to. So when we look at investment markets over the last couple of years, and we start off a new year when there's been all this noise, I think it's really interesting to look at the predictions that were made last year. So these are the predictions that were made by all the top investment banks around the world, from Goldman Sachs, Deutsche Bank, Citigroup, Wells Fargo, JP Morgan, you can name them all. This is what happened in the market last year. The S&P 500, the US broad index, top 500 companies by size in America, grew 23.3%. The average over time has been 12.3%, so that's a pretty good outcome if you're investing in US stocks. And all these predictions were way wrong. Some were saying it was going to be minus 10. The best, Oppenheimer, were saying we expected a return of 10%. Not even close. So again, just put that in perspective when we're looking forward this year. All this noise and all these predictions, it's unlikely they're going to be right. So, obviously the big question is, well, how do we invest if all these predictions are wrong? We'll get to that, of course. And when we look at that, we say, well, how do we invest if people can't predict and people can't get that right? Well, we have an underlying belief in the power of markets. There's all this noise going on. There's billions and billions of trading every day, and that creates prices, and those prices are relatively efficient. We've got a pretty good idea of what's going on, and that's an update. And we've got a pretty good understanding of what's going on with those markets every day, and that gives us a bit of a sense of what things are priced at and how markets are pricing that very efficiently every day. So as you know, we want to implement that and capture those prices as efficiently as possible. We don't need to have predictions to invest successfully just as well, because most people who predict get it way wrong. And just some stats there around what's going on. Despite all this noise that we're seeing about this, daily updates and what's going on and which country is going to be taken over, etc., there's actually the underlying corporate earnings season, which isn't being reported as heavily, has been really positive in the States, obviously driving a lot of the market returns. the US economy is growing. It's actually very, very strong. So the macro and underlying stats are actually looking quite positive at the moment, despite the negative news that's going on around the world. And one thing we always like to look at is, like, people say, well, maybe it's the market's expensive right now. Well, what does that mean? Well, the market's always been expensive. If we look over time, investors have had a pretty good run for a long time. This is the Australian share market over time. This is if you invested in cash and bonds and what inflation's been. So we sort of know that story, that long-term investors get rewarded. At any point along that time, we've seen, this is the ASX 200 in blue, the S&P 500, the US market in red, and the world index in black. At any point, if we went back in time, someone would have said the market's expensive, and sure, at times that's why we diversify. There've been some drop-offs with COVID and GFC and things like that. But at any point along that chart, I can promise you that everyone would have said, at the moment, markets look a bit expensive. So we have to take away that noise and start to believe that, no matter what, over time, things are okay. But we can't obviously put all our money in one basket. We have to diversify. One of the things we're doing here at Arch is we're constantly looking at our investment philosophy and the structure and refining that and making sure it's still very valid. And especially when there's lots of noise, to say, look, what are we doing? Are we making sure that everything's still okay? Should we be entertaining the thought of different investments or changing asset allocations? And that's a very strict process. It takes time. It's not something we're going to make a knee-jerk reaction to. There's a very deep process around how we might add an investment or change an asset allocation. And so when we look at that, we always come back and say we've got to look beyond the headlines. The headlines, unfortunately, don't tell us what's going to happen, tell us what happened in the past, and might tell us what's happening today, but not even tomorrow. So a big part of that fundamental philosophy is taking away that noise and coming back to the fundamentals, coming back to the data and the research and things that have worked over the last 40, 50, 60 years, and using that as a basis of how we should invest going forward. Now, one of the things we're really proud about, as I said, fortunately we came across this amazing investment manager called Dimensional back in the start of my career, early 2000s, and their performance, this is the 20-year performance of the industry and the Dimensional stats. And it talks about survivorship, so how many funds back 20 years ago are actually still around and how they've performed. So 20 years ago, only 38% of the funds in the industry are still here. So go back 20 years, all the funds on the list, only 38% are still here. Of those, 25% have outperformed. It's not too bad. Dimensional, 100% of the funds are still here. Every one of them still around, has stayed liquid for that time, and 78% of them have outperformed. It's a massive gap, massive difference, a massive story, a great story. And so we're really excited that we've been able to use that approach for all our clients, and we continue to do that. And we'd expect the same sort of stats in the next 20, 30 years. So when it comes down to it, we have to take that noise out of it. It's interesting, all the noise in the media, but we have to take it out of the equation. We can only focus on what we can control. We've got an investment plan that fits your risk tolerance. We've structured a portfolio along these dimensions of expected returns using data and research as a fundamental way to build portfolios. We diversify globally. We've seen those charts that there's been good returns over time, but if we're in one asset class, it can be quite volatile. So we have to diversify. We have to manage those expenses, turnover and taxes as best we can. And we have to stay disciplined. This is a really important time in markets. We have to stay disciplined to that process, come back to those fundamentals all the time. So thanks for listening in. I hope that's been really helpful. Of course, as always, reach out if there's any questions. I hope you enjoy these videos and look forward to speaking to you soon.